One of the most common commercial real estate interview questions that analysts and associate candidates are often asked is, if you had $100 million, where would you invest that money and why would you make that choice? And to answer this question, you need to have a baseline knowledge of both what's going on in different parts of the real estate industry and also what drives value within commercial real estate. So to make sure you're ready for this question, in case this comes up, in this video we'll walk through how you can go about developing a real estate investment thesis, the most important types of research you'll want to dig into to prepare, and how to answer this question successfully within an interview setting. So building a real estate investment thesis is really a three-part process, and the first part is choosing a product type that you're bullish on and then backing that up with supporting data. There are so many free resources out there that can help you understand how different product types are performing, including publications like CBRE's Quarterly Figures, Cushman & Wakefield's Market Beat reports, and Newmark's Capital Markets reports, and even just running a general Google search for the product type you're looking for, followed by the words real estate report, and then the quarter number and the year number you're looking for will usually bring up a handful of helpful links that are worth looking into further. And within your research, what you're really looking for here are things like strong rent growth, low vacancy levels, positive leasing trends, or indications that even if these things aren't positive right now, demand for this product type is very likely to outpace supply over the near term. And to get a good understanding of what supply is projected to be, this requires not only looking at current market trends, but also information on the current construction pipeline, as well as net absorption figures, which measure the total leased space minus total vacated space minus new supply that's been delivered within the market during that time. And on the demand side of things, from a product type perspective, this is really going to come down to how you believe different sectors are going to change over time and really how human behavior is going to drive leasing decisions. For example, if you think that demand for e-commerce is going to grow more quickly than developers can build new warehouse space, you might be bullish on the industrial sector. If you think that housing prices are going to continue to rise and stay out of reach for renters for the foreseeable future, you might be bullish on the multifamily sector. Or if you think that the work from home trend is going to reverse itself in a really big way over the next few years, you might be bullish on buying distressed office product below replacement cost. And once you've clarified what you believe, the next step is to actually do some research to test if those beliefs are true. So for example, looking for historical or projected online sales data, researching single-family home construction starts, or digging through polls or surveys answered by senior company leadership that can indicate if workers will be headed back to the office. As is the case with essentially everything we'll talk through in this video, there isn't necessarily a right or wrong answer here, but whatever your thesis is, you need to be able to back that up with research rather than just an opinion. Now, once you have clarity on a product type target, the next thing you'll want to do is choose one or more geographic markets to focus on next. From a real estate perspective, the strength of a geographic location often comes down to job growth and net migration patterns first and foremost, and these are the main things you'll want to zoom in on within your research. Two of the best places to find this information are the US Census Bureau website and the Bureau of Labor Statistics website, since most articles you'll find online that are related to these topics will end up citing one of these two sources, but even just running a simple Google search for the fastest growing cities in the country or the cities with the highest levels of job growth in the country can also help you understand current market trends in a much more direct way. And if you already have a product type focus picked out, most major brokerage firms will also release free quarterly research reports on specific product types within specific geographic regions, which can help you zoom in on the real estate fundamentals in the fastest growing cities that you might want to look into. For example, if you are bullish on the industrial asset class and you also notice that the Atlanta, Georgia metro saw significant job growth year over year, you might use a search term like Atlanta Industrial Real Estate Report Q4 2023, and from there you can comb through reports from a variety of different companies that can help you get more insight into local industrial performance. For From a geographic perspective, you ultimately want to be able to point to a clear trend of both businesses and people moving to an area, along with reasons as to why that growth might continue over the long term. And then you need to be able to articulate how those trends are going to positively impact the commercial real estate product type that you're looking to pursue. Now, once you have a geographic market and a product type picked out, the last step in this process is to choose a strategy that you want to pursue based on investment goals and current market conditions. This part of the process goes a layer deeper and really gets into the why behind a commercial real estate investment. And in an interview setting, since you're going to be looking to join an established company with an existing investor base, this part of your strategy should take into consideration both the risk appetite of the company's equity partners and also the biggest opportunities that you're seeing right now in the commercial real estate markets. For example, if the company's main equity partners were pension funds and insurance companies that wanted to preserve their capital and generate predictable long-term cash flow, you might build a thesis around acquiring newly built office buildings in the center of cities like New York, Los Angeles, San Francisco, or Boston, targeting deals with existing long-term leases in place and a distressed developer with an upcoming loan maturity. Alternatively, if the company's investor base is made up of high net worth individuals that are looking for opportunistic deals with home run potential, you might develop a strategy to target build-to-suit retail developments, taking advantage of low levels of supply and existing tenant relationships. Investors ultimately put their money to work in real estate to generate a return on that investment, and in order to attract capital and build long-term relationships with equity partners, companies need to act as fiduciaries to that investor base. And by developing your strategy with this in mind, this shows that you're both aware of what's required to serve that investor base, and you're also aligned with the strategy of the company overall. Ultimately, if you're asked this question during an interview, hiring managers are going to be looking for a response that's well thought out and shows an understanding of the business to a level that could be expected of someone researching the firm as an outsider, and whether you are bullish on retail development in the Midwest or office redevelopment in the Northeast, as long as you can back up why you're bullish on the specific product type, location, and strategy that you pursue. This is all a hiring manager is going to be looking for when asking this question. And if you want to make sure that you're ready for the commercial real estate interview process and you have the skills you'll need to pass an Excel modeling exam that might be given to you when interviewing for analyst and associate roles at top commercial real estate firms, as always, make sure to check out our all-in-one membership training platform, Breaking the CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break-In a CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on the channel on commercial real estate interview questions and answers to those questions, make sure to hit the like button and let me know. And let me know in the comments what your investment thesis is right now, including the product type, market, and strategy that you pursue. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.